I'm Matt Bishar with NAREITsREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me today is the incoming NAREIT chair, Ed Fritsch. Ed is also the president and CEO of Highwoods Properties. Ed, thanks so much for joining us.
Thanks for having me.
So as you begin your term as NAREIT chair, how would you describe the current state of the listed REIT industry?
I think the current state's a good state. You know, things are pretty good. Fundamentals are in good shape across virtually all sectors. So the world, as far as where we are, is held together quite well, and the REIT instrument continues to perform well. I think concerns about interest rates have weighed on REIT stocks as they have the broader market, maybe a little bit disproportionately in comparison to what is anticipated with regard to the move in interest rates. But history does show that there's plenty of evidence that when interest rates do go up, it's not always negative, and it's typically not negative impact on REITs. So not all bad. You know, the message for REITs is good. The level of investment in REITs is high. The level of awareness is strong. This coming 2016 will become part of the global industry classification standard with a new line item for real estate, and that's exciting and creates new opportunities for us who are REITs.
So Ed, what are your primary goals for the coming year as NAREIT chair?
Well, I think the goal for the NAREIT chair is pretty consistent across the years, and that is in just a few buckets. One is just to effectively communicate what the REIT instrument is. I think that we're a little bit at a new dawn here in that we're at an inflection point akin to when the modern REIT era came about. And so I think that inflection point is that we've gone from not a niche investment but to a mainstream investment. REITs now represent a market equity cap of $1 trillion and asset values of $2 trillion. And those are big numbers. And so what it presents for us as an industry is a broader audience in which to get in front of and be sure that they understand the benefits of the REIT instrument. The other side of it is obviously what goes on in the district. And so our need to continue to convey the message about REITs and real estate on Capitol Hill is essential to what we do. And I think that within the membership of NAREIT, there's a high appreciation for the value that the NAREIT staff brings in their wisdom and intellect and track record for being able to get in front of the right audiences and convey to them the things that are important to us as an industry.
So lastly, looking at 2016, what do you see as the biggest challenge for the industry?
I think the challenges, again, it's nothing different. There are certainly nuances within the economy and the various sectors. I mentioned earlier interest rates. That's a common topic. You can't get on an elevator without somebody saying, what do you think, when do you think it's going to happen and how much? And I think there's a general consensus that it won't be a lot of rapid, significant turns, but that some increase is coming. I believe that there's a disproportionate amount of weight being laid upon REIT valuations as a result of those discussions. So I think let's get it over with. And so hopefully in 2016 there'll be more clarity to that. It will be digested, and REITs can return to a normal good pace without having to look over the shoulder at the conversation of what's going to happen with interest rates. Fundamentals would obviously be another category of something to be cognizant of. I'm not sure it's a quote-unquote concern, but we're always cognizant of it. 2015, I think we all experienced a collection of fundamentals that were very positive. Plenty of access to debt and equity, inexpensive money, low construction, good demand for product, a fairly stable economy. So a lot of good things came together that made 2015 a good fundamental year. And as we look into 16, is there concern that that's going to start to dismantle? I don't think so. That's just one person's opinion, but as I spend time with peers and folks at NAREIT and other industry leaders, there's not a lot of signs that there's going to be a significant dismantling of good fundamentals. So I think what REITs have to look forward to in 2016 is another good year of fundamentals with inexpensive money and access to both equity and debt, and there will be transactions.
Great. Ed, thank you so much for joining us.
Thanks for the opportunity, Matt.
For more from REITworld 2015, be sure to visit REIT.com.